A very happy morning. Today we are going to see about an overview of financial pillars. Introduction to banking and insurance. Banking. Banking is the business activity of accepting and safeguarding money owned by an individual and entities and then lending it out to earn a profit. Banks are a financial institutions that provide a wide range of financial services to the public, such as accepting deposits, providing loans and credits, enabling payment and money transfer, offering investment and wealth management services. Banks play a crucial role in the economy by accepting an intermediaries between servers and borrowers. They help to maintain the flow of money and support business growth and economic stability. Insurance. Insurance is a financial product that provides protection against the financial losses and risk. It involves a contract known as a policy between an individual or a business, the insured, and an insurance company, the insurer. The insured pays a premium in exchange for coverage against specific risks such as life insurance, health insurance, property insurance, business or risk. Insurance promotes a financial security, helps individuals and business manage uncertainty and ensure peace of mind during unexpected events. So, banking and insurance are essential components of the financial system, enable capital formation, risk management, and economic stability, provide service to individuals and business and government. Aim. Explore their structure, functions, and significance. Next, a financial institutions it deals in money and credits. Accept the deposits from the public, provide the loans and advances, offer service like remittance, safe deposit lockers, and credit cards. Next, types of banks. There are some types of banks: commercial banks, cooperative banks, development banks, central bank, investment bank, retail banks, Islamic banks, online banks, etc. So, commercial banks service individuals, small business, and corporations. Provide service like savings and current accounts, loans, credit cards, and money transfer. Example: Bank of America, HDFC Bank, Barclays. There are the commercial banks, cooperative banks. Cooperative banks operate on a cooperative basis, owned and managed by their members, serve people in rural and semi urban areas, focuses on providing affordable loans and financial services to farmers, small business, etc. Next, development banks provide long term capital for large projects such as infrastructures, industries, and development activities, often government owned and focus on national development goals. Example: NABARD, India. World Bank, International Development. These are the example of development banks. Next one, central bank. Central bank that affects financial institutions of a country, control monetary policies, issue currencies, and regulates other banks. Example: RBI for India, Federal Reserve USA, European Central Bank. These are the central banks. Next one, investment banks. It helps combine raises capital by issuing stocks and bonds, and offers advisory services for merger, acquisition, and other large financial deals. For example, Goldman Sachs, Morgan Stanley. Then retail banks focuses on individual consumer rather than business, offer personal banking services like saving, personal loans, debit or credit cards. Many commercial banks also act as a retail bank. Next one, online or neobank operate entirely online with no physical branches, providing digital first banking experience. Example, Chimmy USA, N26 Europe, Jupiter India. The next thing is types of insurance companies. First of all, what is insurance? So, financial agreement that offers protection against potential future losses, risk transfer mechanism, encourages savings and investment, legal contact between insurance and a policy holder. Coming to types of insurance companies, there are various types of insurance companies: life insurance, general insurance, health insurance, reinsurance, composite insurance companies, mutual insurance companies, stock insurance companies. So these are the types of insurance. First thing is life insurance companies. It provides insurance coverage related to the life and health of an individual. Payout of a sum of money either after a set period or upon the death of the insured. Common products like term life insurance, whole life insurance, and endowment plans. Examples: LIC, MedLife, Prudential. These are the examples. Next thing is general insurance, non-life companies. They cover the risk other than life, includes property, motors, travel, and liability insurance. Common products like car insurance, home insurance, travel insurance. Insurance companies are ICICI Lombard, Aslet, AXA. Then next thing is health insurance company. Health insurance company specialize in covering medical and health care related expenses. Offer products like individual health plans, family floaters, critical illness covers. Example: Star Health, United Healthcare, Max Bupa. These are the examples of health insurance companies. Next thing is reinsurance. Reinsurance get insurance for risk management to provide the other insurance companies. Help insurance companies manage large risk and prevent financial losses. Example: Swiss Re, Munch Re, General Insurance Corporations of India. Then fifth one is composite insurance companies. Offer both life and non-life insurance services under one roof. Common in some countries, though may separate life and general insurance regulations. Example: Bajaj Alliance, India. Next one is mutual insurance companies owned by policyholders, that is the customers itself. Profit are either reinvested invested or returned to the policyholders as a dividend. Focus on member benefits rather than a shareholder's profit. Stock insurance companies owned by shareholders, it aim to earn a profit for the shareholders. Common in it, it will be common in many countries. The next thing is role of banking in the economy. There are certain rules to follow the banking in economy. Promotes saving and investment, facilitates payments and settlement system, supports and entrepreneurship and industrial growth, act as a financial intermediaries, implements a monetary policy through interest rates and reserves. So there are many vital roles. Mobilization of savings. It encourages the people to save money by offering interest on deposits. These savings are collected and used to fund loans and investments. Then providing loans and credits. Banks gives loans to the individuals, business and industries. This helps the people buy homes, start business and investments, and credit supports economics activities and job creations. Facilitating payments. Bank makes it easy to transfer money using checks, cards, mobile banking, and online transfer. This speed up trade and reduce the need for cash transaction. Support business and industries. Bank provides working capital, project financing, and trade finance. This helps the business grow, modernize, and expand operations. Then X1 is credit money. Banks create money through the lending process. This increases the money supplies and help economic expansion. Controlling inflation and liquidity. Banks helps to increase the interest rates reserve policies set by the central bank. This helps to control inflation, money supply, and economic stability. Next one is promoting financial inclusions. Bank reach rural and undeserved areas to offer banking services. This helps reduce poverty and improve the standard of living. Then employment generations. Bank themselves creates jobs. They also support other business which leads to more opportunities. Foreign trade support. Bank facilitates international trade by providing foreign exchange services and export import financing. So these are the role of banking in economy. Mobilization of savings, providing loans and credits, facilitating payments, support business and industry, create money, controlling inflation and liquidity, promoting financial inclusion, employment generation, foreign trade supports. The next heading is role of insurance in the economy. Risk management. Risk management. Insurance provides risk coverage to the individual's business. It promotes the economic and social security. Encourage a long-term investment through premium collection. Facilitate a credit by reducing lender risk. The main thing is risk management. Insurance helps individuals and business manage a risk by covering potential financial losses. This allows them to take on new opportunity with fear of total loss. Encouraging savings. Life insurance and other long term policies promote the habit of saving people. These savings can later be used for personal needs or emergency. Support business growth. Business are more confidential in expanding, operating, knowing that their assets and operations are protected. Insurance also covers liability, property, and employees. Job creation. The insurance industry itself employs millions of people like agents, manager, analysts, and support staff. It also supports job indirectly in hospital, repair service, legal service, etc. Promote investments. Insurance companies invest the premium they collect into government bonds, infrastructures, and industry. These investments contribute to the country's development, stabilize the economy. Insurance reduces the economic shocks caused by natural disaster, accident, or business interruptions. This stability supports the long term planning and economic growth. Government supports and public welfare. It helps to health and life insurance can reduce the financial burden on public health care system and welfare programs. Then encouraging entrepreneurship. Entrepreneurs are more likely to take risk and start business if they have insurance protections. So these are the role of insurance in the economy. Next, there is an interrelationship between banking and insurance. Financial service synergy, risk management and credit, investment channels, customer reach, young economic growth support, regulatory overlap. Bank sells insurance products, financial coverages and customer reach, shared data and financial service infrastructure. Both are regulated under respective authorities like RBI and IRDA. Financial service synergy. Banks and insurance companies offer financial products that help the individual to manage money and risk. Risk management and credit. Bank rely on insurance to cover risk, loan default, property damage, or employee related issues. Insurance helps bank to reduce financial losses and maintain trust with customers. Investment channels. Insurance companies invest premium funds into banks and financial markets. These investments help to provide liquidity and capital for the banking sector. Customer reach. Banks act as a distribution channel for insurance product, reaching a wider audience. This creates a convenience for customer who can manage both banking and insurance under one roof. Economic growth support. Together they support the business growth. Banks provides capital and insurance to manage risk. This dual support enables the business and individuals to grow confidently and safely. Regulatory overlaps. Both the sectors are regulated by financial authorities and follow strict compliance norms. Corporations helps in managing financial stability and transparency. So these are the main relationship between banking and insurance. First one is financial service synergy, risk management and credit, investment channels, customer reach, economic growth support, regulatory overlaps. Conclusion. To conclusion, both the sectors are vital to our financial developments. Increasing use of AI and fintech, greater focus on financial literacy and inclusion, regulatory updates to keep pace with technological evaluation. Thank you.